I think if you're just thinking of it from a personal wealth building perspective, I would probably be buying something in my backyard, renting it, and trying to manage it and maintain it myself as efficiently as possible, rather than trying to fly halfway across the country to find the right market, the right time, the right entry point, the right management team. I just don't think it makes sense to take on those risks if you're looking for a deal or two that you could just saddle up with for the next 30 years and let the real estate work for you. But, if the goal is to take really more of a business approach, I think you have to be willing to get uncomfortable. There's going to have to be leaps that you take in the interest of just learning, partnering, continued education, all of those things.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to Weiss Advice. I am your host, as always, Yona Weiss. Today, I am joined by Josh Eitingon. What's going on? He is the managing partner, founder of DXE Properties. What's up, Josh?
Not too much. It's good to be here. Thanks for having me.
Well, it is my pleasure. I'm glad we had the opportunity to connect and speak. You guys are focused, just to guys give a little bit of context to our listeners. Multifamily, value add, really focused on the heavy management aspect of the business, I would say, and growing. I don't know. How would you say?
So predominantly focused on multifamily. We own the majority of our holdings in the Southeast across a handful of cities and states. So North Carolina, South Carolina, and Georgia. We own in Charlotte, North Carolina, Charleston, South Carolina, Atlanta, Augusta. We've owned in the Midwest before. We've owned in Florida before. And actually, as part of our portfolio, we do still own a couple neighborhood retail centers here in the New York Metro.
Oh, very nice.
Would have held up pretty well throughout this pandemic. So there's a lot of uncertainty if you asked me how they were doing 9 months ago, but it's good to see that they weathered the storm pretty well so far.
That's good to hear. And what's kind of most impressive is that a lot of this has really been in the last couple of years. So you've kind of transitioned much more full-time into this.
Definitely. So we're a newer company. We've been at it, myself and partner, I'd say 3-4 years full-time. We have admittedly had our own entrepreneurial paths where we did some deals on our own prior to coming together. So there was some base that we were working around. But yeah, we really committed to this, 3 to 4 years ago.
How did you find real estate? I mean, was it something you grew up around? Was it something you had a little background in beforehand? Or did you kind of fall upon it somehow?
I had no background, no family involvement. My family's owned their own, primary residence, and that's it. So no one's really ever done any sort of real estate investment on the family side. I was working at the beach, actually, delivering chairs and umbrellas to people. And I just started reading books. I read like Rich Dad, Poor Dad, and a lot of that series of like intro level real estate books. And it just made sense. So I was committed to getting into real estate, weaving path, met like property manager, and he ultimately introduced me to my first deal in Cincinnati, Ohio, a 20-unit distressed deal. But it was not traditional. I didn't go to school for business management, worked at a software company, cut my salary almost in half to work for a real estate investment company once I was all about real estate, and sort of did it in a maybe less than traditional path, I would say.
Definitely. I mean, listen, everyone has their own path. And what's most fascinating about the people that I interview, including yourself, is that everyone has a different path. But the common denominator we see is that people are looking for change. People are looking for a way to get out of the rat race, a way to kind of be entrepreneurial and, take their financial freedom and their, future in their own hands. And I think that's something that you've done. At this point, it's grown into a business, right? It's grown into a real investment company where you're bringing on investors as well.
Definitely. I mean, we've been bringing on investors always. I knew no other way.
Really? So even that first deal in Cincinnati, you had investors?
Even that first deal, yes. It was all all debt basically. I just borrowed money from immediate friends and family that were willing to take a flyer on me because they liked me. But that was the start, and that's sort of never looked back. Learned how to do it, I'd say, more the right way or the more responsible and accurate way. But it's been gradually and really building that same base. Even now, we have no more than 50 or 60 investors that participate in, I won't say every single deal, but the majority of the deals that we do. And it's just that. And it's been working well. And it's taken that first person that wrote me a $10,000 check, 9 years ago, that's now writing $100,000+ checks over and over again.
Wow.
So it's a real step-by-step process to get to this point.
Sure. Because listen, if someone sees your commitment and sees your dedication and sees the return of their capital, I assume that first guy who wrote you that first check for 10,000 9 years ago didn't lose his money.
Right, exactly.
It would be a different story, right?
So just continuing on that path, you obviously talk to many versions of myself, right? In all shapes and sizes that do either much of the same, maybe a little bit different, but the business only has so many variables to it. So, we do much of the same. What do you see? I guess some people better than others, but what do you see that you like and dislike in terms of what's out there in the marketplace today, the way people are raising money, how it's being done, what's like concerning, not concerning? I just curiosity, because I know how many of these you do. So I wonder which ones you wrap up and go.
I talk to a lot of people, not just on this podcast. I'd say in this podcast, I talk to just a very small amount of people, but on a daily basis in the business model and with the cost segregation, I'm talking to property owners and investors, many every single day. And I will, I'll be honest with you. There are some things I see that are a little concerning. As you mentioned, I'd love to hear your opinion on this as well. But one thing for certain is that, it's kind of funny. We bring up the example of your first deal, right? 9 years ago. Well, everyone has to start somewhere, right? The question is, are you starting with borrowing $10,000 from a family member or a family friend who knows you, who trusts you, and like you said, they like you? Or are you, starting on your first deal trying to raise, 6 figures or 7 figures from people that don't know you? And really don't have that track record. And that's a little concerning when I see that. So to me, that's probably the biggest thing that I'm seeing right now.
Yeah. I would, as a continuation on that, I would pinpoint the same concern. I think what I did was border a little bit crazy, frankly, and maybe it does take a little bit of craziness if you don't have a track record and you do want to get started. And last thing I would say to someone is don't get into this business. But in the same breath, it's such a huge responsibility when you do take on investor money that I think you really owe it to yourself to, maybe it's partnering with the right person, maybe it's making sure you're well enough educated, whatever that may mean.
Right. There's many levels of education.
Yeah, exactly. But it could be a little bit of the Wild West. So it could be a concerning time, I think, for that first time passive investor that knows no one and is just sort of looking to jump in. So I don't know. And I passively invested myself when I was getting started and tried to do that same betting. But it's interesting. I think at some point there'll be a shakeup that'll weed out the people that perhaps shouldn't be in this business.
Yeah. Well, unfortunately, when something like that happens, meaning we all should be rooting for each other, right? If you're investing in this business and you are, and this goes for every industry and anything that you do, right? You want to see other people succeed, so you want to root for other people, but because you're kind of attached to that, whether you like it or not, right? People are going to look at multifamily investors all the same if one guy messes up, right? And even nowadays, recently there was another report of someone who was caught in fraudulent activities, right, raising money and or not raising money, a Ponzi scheme, these kind of things. And when that's seen by the general public, there's a little bit of a bad light that's shed upon everyone in the industry. And I remember Brian Burke, who's a pretty famous syndicator. He's been in the business 30 years or so. He was a guest on this podcast, episode 39. You guys want to check that out? And he said something really interesting. he said that the number one rule in raising money and buying, buying deals, bringing on investors, the number one concern as a syndicator is how not to lose your investors' money, right? It's not about how to make the money in the deal. It's not about how to get the best, debt. It's not about how to the number one concern is always how not to lose their money. So when you go with that mindset, it's a total reframing.
I think that's totally fair. And as long as that happens, how forms are being filed with the SEC or whatever, it's a non-issue because no one's going to care. It's when things go sideways that things could go extra sideways, I guess.
100%. What are you seeing right now in terms of the market, current market? I mean, you guys are still actively buying deals, right?
We closed the deal in December, which we were excited, happy to do. It was actually a loan assumption off-market deal that we were able to get in front of, and it was a tick. I actually had a old property that I sold. We did a 1031 and partnered with another entity to take that down. It's tough. It's always tough. If you had me on a year ago, I would say the same exact thing,
right,
or a year for that. But it does feel like there's extra little in terms of just deals that are out there. Admittedly, our focus has shifted a little bit. We started a little more focus on the workforce, pseudo affordable housing space where we would do, I'll call it lower end renovations, to really like an absolute focus on location where we really don't care about vintage of the property as long as it's well located and we could bring money to it with a good, comfortable capital stack and good about that underlying location. That's all we care about.
So what makes the best location for you?
So I think the first thing, and it's simple, but it's just what's our surrounding home prices around us? What's median home prices? Because I think that represents very quickly and easily, what type of demographic are we able to tap into? What's the affordability look like of the people that are already there some way, somehow? Schools, proximity to, call it, stronger retail, all of that's important. But I think home prices and just adjusted median incomes in those areas, like the last deal we bought, median income for the current renters was over $50,000, which is, it's always relative. But in a submarket of Atlanta where rents are $1,000, it shows that there could be good reason to believe room for growth from an affordability perspective.
Gotcha. Okay. And so, typically, I assume these are, workforce housing type properties that, you're not looking at Class A for $1,000 in Atlanta.
No. It's B class. I said 1,000. That one, our average rents were $1,200 when we stepped into it, and we think we could take them into the 14s. But yes, it's people that are either, I'll call them grayish collar, so maybe some blue collar, some white collar, but just really a mixed bag of tenants is what we're often catering to as we get above that C class space.
Interesting. And you mentioned earlier that you guys also have a little bit of retail in your portfolio in New York, where you're located, right? You're investing multifamily in the Southeast, which are great, emerging markets and growing markets. But locally, you have some retail properties. And that's something that you're continually looking for also?
Not actively. I would say that both of the purchases we had were unique, situational. We're a group that we're going to do maybe 2 deals in any given year, and we're going to underwrite an offer on hopefully a deal or 2 a week. Both of those deals were just really unique situations. One through an accountant in an estate situation, the other one through just a personal broker friend that knew of me. And I think there was a meaningful discount day one that we stepped into. And we believed in the thesis and still do. And it was I'll say a bet, but it was a bet on just some of these employers that were not going to go anywhere. Just the neighborhood. One's a Dunkin' Donuts, there's a CVS in there, there's a pizzeria, just the type of spaces that should be there for a long time, that are going to hopefully need to be there for a long time. We have another with a laundry person, a deli. So those types of tenants. I don't know that today either of us, the partners here, have the stomach perhaps to get into buying more retail in New York. But fortunately, those deals have held up really well and cash flowed pretty well since buying them.
That's great to hear. What about other types of properties? Are you guys solely focused on multifamily, or is there any interest in kind of transitioning or exploring other avenues?
So we've done a couple small condo development projects that have been successful, and we were glad to have done. I think right now it's not something we're actively looking at. Maybe it's a risk tolerance thing, and
Mhm.
I know that the time's right, but who knows? It's an argument to make that the time is right today on that side. And then otherwise we're trying to really stick to what we know, especially now when pricing's higher and everything's that much more sensitive. Like I think there's a great case for industrial. We just don't know it. So I have no interest in
Right.
competing against these people that have been doing it for decades.
Understood. Yeah, that makes sense. And certainly there is. I mean, I literally spoke to someone else earlier today that they are very active in industrial and multifamily, and so, but it's because they've done it, right? They've done it for a long time. So totally understandable. Have you ever had any deals that have kind of gone sour? Like anything that's, turned out to be a rotten apple deal?
No, I mean I could say the one of my condo project that I did, we made a little bit of money for our investors, but not much on it because as the last unit was selling, the property had a dock that we built, and there was like flooding that was like unheard of on the Ohio River. We were actually the only commercial residential dock on the Ohio River at the time, and believe it was actually swept away down the Ohio River as part of it. Turned into like a litigation. I'll say nightmare because it was a multi-year thing that just was a hang up, and for us to set, and we had to eventually settle it, which wiped away what would have made it an excellent deal to a single or a double. So that one definitely irks me and is always in my memory, but it's an interesting story for sure.
For sure, but to be fair, that sounds like obviously that was something that couldn't have been avoided, right? I mean, like a flood wiping off a certain part of your property. I mean,
I, yeah. I mean, there's also variables that or other factors that came with it, but that was definitely the tipping point, at least that stalled out what would have been a good one to a not so good one, and also and insurance and coverage for docks and exceptions was also interesting, and
right, right.
of an HOA and a lot of pretty wealthy people also angry and involved in that suit is it's interesting. It was interesting.
Okay. Well, it sounds like opening up a can of worms over there. We do a whole episode on
Well,
that.
I had to answer it honestly. Yes.
Well, that's great. I appreciate that. What about, just kind of our last question before we go into the final four over here, but what, going forward, right? Is there anything that, you would say to someone who is in your shoes, right? Looking back, right? You wanted to get in, you were sell, on the beach, right? Going back to your story, reading the books, trying to get started, doing that first deal in Cincinnati. I mean, what advice would you give to someone who's starting out like that?
I think it all depends on what you want. For me, I wanted to build this into a business that was going to just be with me and really support me over time, and that I could build and continue to build, just not do it for a few years at a time. I think if you're just thinking of it from a personal wealth building perspective, I would probably be buying something in my backyard, renting it, and trying to manage it and maintain it myself as efficiently as possible,
Hmm.
rather than trying to fly halfway across the country to find the right market, the right time, the right entry point, the right management team. I just don't think it makes sense to take on those risks if you're looking for a deal or two that you could just saddle up with for the next 30 years and let the real estate work for you. But if the goal is to take really more of a business approach, I think you have to be willing to get uncomfortable. There's going to have to be leaps that you take in the interest of just learning, partnering, continued education, all of those things to ultimately be able to begin. But I can, it takes time. It takes time. I think no one will say they jumped into real estate and, well, I could be wrong on the syndication, become a millionaire overnight. Probably not, but
Why
I
not?
could.
But there are some people that are do different methods of syndications, maybe doing some things with very jumping off the deep end. But yeah, I agree with you. There's probably not very likely to become a millionaire overnight in real estate. It's a long game. It's something that you want to make sure that you're doing right. And I think your advice is great because it really does depend on your situation. But if you're looking at it from a business perspective, a business standpoint, you have to go into like any other business and be willing to take those risks, make sure to educate yourself and kind of have the right build it like a business.
Yeah, I mean, I think there's that approach. And I mean, if I'm an individual getting into real estate, I have no, I said it myself. I still passively invest in deals. I think that deals that make sense, that are in some of these markets with the right sponsors, operators, people that have sort of proven themselves and have a track record to cite. I mean, that's tough to compete with because there's certainly a safety to scale. And if you don't want to be the one that's getting the call to replace the doorknob or whatever it may be, I think it's a very, very efficient way to build wealth with direct ownership and all of those same benefits.
That's great. Awesome, Josh. So let's transition here into the final four, right? These are 4 questions we ask all of our guests. First question to you, what is the worst job that you ever had?
I worked in a Friendly's. I was there for 1 shift and I left forever.
Okay, let's hear about that shift.
It was really just a training shift. Hated everything about it, and I was fortunate in that I was actually able to get a unpaid internship. It was a summer college, and I said, well, the little money that I would make at Friendly's, I think I'd be better off figuring out some other way to get some spending money and take this unpaid internship. But that would be the one that I would call out, as I was not looking forward to that summer.
Okay. Yeah. Okay. Well, any type of fast food or anything like that is usually pretty grueling.
Hot, right.
What's a book you've read that's given you a paradigm shift?
I think I could probably point back, and there's a few. A book that I really liked that maybe is not referenced too much when he asks this question is Powerhouse Principles, which is Jorge Perez down in Miami. It's his own story. I don't know if it was truly an autobiography, but it was a biography of him. And he really built an empire on his own. He was one of the leads of Related. And it's just a really great story. He basically started from nothing as an immigrant and put together his first deal and just ballooned from there. But there's a lot of, I think, practical pieces of advice, and it's very readable as opposed to a number of these books as well.
Right. Okay. Definitely put that one in the show notes. Definitely one to check out. I hadn't actually heard of that one before. So appreciate always adding a new book to the reading list that is ever growing. What's a skill or talent that you would like to learn?
Something that I'm committed to continuing to better myself at is just public speaking. I think it's enormously helpful. We ourselves, we used to do a number of live events, and I used to speak in front of a room, and I think have gotten better and better at it. But I think it's a wildly underutilized skill. I think it's something that everyone should be doing, and I'm definitely committed to getting better at it.
Well, podcasting is a great way to practice.
That's true. Although I get to sit in my room with no shoes on and do this podcast, though.
Oh, that's awesome. There's a great book for anyone looking to get better at public speaking. Probably the best book on the subject that I've ever read is called Steal the Show by Michael Port. So he actually brings it into really practical examples from not just public speaking, but also, he was an actor. And so you're talking about, but he also turned it into like business. So talking from, using improv, for example, using comedy, using negotiation skills, and all kinds of stuff like that. So really great book. I'll put that in the show notes as well. Steal the Show, and you should definitely check it out. I think you'll like it.
I will.
Fourth and final question to you, Josh. What does success mean to you?
I think it's freedom of time. Not that, I think that even today, any given day, anywhere, I can create my own schedule, do whatever I'd like. I mean, where I won't say that I take too much of that supposed freedom of time that I could have, but that's what I'm in it for. I mean, it's not the now, it's down the road to be able to really just stop anything and do whatever I'd like. But even now, I mean, a week from today, I'm going to take a trip and take a day off, and it's fine to do. And I'll be able to do that at my own accord, basically. But that's really what I'm in it for. It's my own freedom, and then my family, and ensuring that there's a strong base and, legacy and all of those things, I think, tie into what I'm in it for day to day.
Sure. And are you guys, you're building a company, right? Building a business, but is that you're bringing on employees, I assume, hopefully, or going to start really running the business?
We have our first coming in this summer, so excited for that.
Very exciting. Well, it is truly exciting. It's great speaking with you. Where can our listeners find you or reach out to you, Josh?
Sure. DXEproperties.com is our website. Feel free to reach out to me or my partner. You can schedule time with one of us directly. And happy to be there as a resource, not just to investors, but talk to people that are just getting started or considering a different investment class, whatever it might be. I'd love to connect.
Awesome. Well, I appreciate your time. It's definitely been a pleasure. And I hope our listeners got a lot out of this conversation. I certainly did. And, hope to speak with you again soon.
Same to you. I appreciate it.
Awesome. And to our listeners, remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.